Hey traders, checking in on the stock market today. So the FOMC, not a huge reaction, although we did end the day with a little bit of weakness. After hours, Facebook bull reaction to earnings is having the market trend a little bit higher. But with where we stand, we've been struggling at the all-time high now pretty much all week. Not a whole lot of action is going on. Is it time for us to be concerned? Are we about to see the bulls run out of steam and roll over into weekly consolidation? I will point out the clues that we need to be looking for the bears to prove it to us. So looking at SPY on the daily chart, we can see, again, bull breaks with a lack of follow through. Whenever I see that happen, for me, I start looking in the other direction for the possibility that we are looking at the bulls running out of momentum to the upside. That being said, after hours, we have a bit of a bullish reaction going on. We close near the low of the day, but a little bull spike on Apple and Facebook earnings. The bottom line is, to keep it very simple, the bulls are just fine until the bears prove something to us. And this is the first time over the last 2 years, essentially, really since the dump back last year, that I have been watching and really honing in on this rotation game that's been going on. And every single day, there's just one of the major sectors that we look to and say, okay, today's not the day where SPY pulls back significantly because this sector is at the high of the day while this sector is pulling back. And usually it's XLF and QQQ doing their inverse relationship. And that is what's keeping the bulls confident. So I am on the edge of my seat on a daily basis, just watching for it. But again, the clues are not there. We have to see all of our major sectors hit the low of the day at the same time if we are going to see a pullback that has any kind of magnitude to it. If we do not see it, we are going to hold this daily uptrend, in my opinion. So that's what we're watching for. And anything above 410.59 keeps the SPY bulls in complete control. So again, if you're the kind of person there that's every single day thinking that this is the day, just write down next to your computer, this has to be happening for the bears to prove anything to us. And it's always step one, all of our major sectors at the low of the day at the same time. We then need to see the bear volume. And that has not happened in a while. QQQ. So we do have a double top at the all-time high and we pulled back, but here after hours we're testing the high of the day. And the reason is Facebook earnings reaction, all-time highs, I believe, 324. Yep, so Facebook is at all-time highs. And we've got Apple, bullish reaction, upper 130s. So we're just looking at all-time high resistance in the 145 range on Apple. So that is helping QQQ stay strong. Could it be a cup and handle? It's a possibility. The pull back a little bit more than ideal. And let's take off extended hours just so it levels out here. But again, we're talking retracements. Size of the retracement was more than 50% or right around 50%. So it is not your ideal cup and handle because we know a bull flag generally will hold the 382 retracement and then look for follow through. But tomorrow will be very telling. Very clear double top, and the bulls trying to keep the daily higher lows intact to try and break that double top. Again, I do still have an SQQQ hedge position that I will stop out of on a new all-time high. IWM. So we shaped up this morning looking like we were going to see daily consolidation begin in all of our new laggard sector names. And I'm talking biotech, solar, MJ, EV, and IWM has been similar the last 5 days, but for the most part in all those sectors, we'll look at them here, but we broke the low of yesterday with no bear follow through, which is ideal for keeping the consolidation very healthy. So IWM is a potential daily bull flag right now. We broke the low of yesterday, it did not hold for the bears, and here we are right up at the high of yesterday, 229.39. So if it is a bull flag, again, just the all-time high of 234.53 as a short-term resistance level as the weekly uptrend remains the most clear time frame for me on IWM. And if IWM heads back to the all-time highs, again, it's just more of that rotation going on and money moving around to different places. XLF, all-time high this morning, and this morning it was these bulls that were keeping us strong and confident because QQQ broke the low of yesterday, first thing. So that's signal number one. Okay, major sector, tech sector, pulling back, breaking the low of yesterday. What is XLF doing? That's the next thing I look at. Nowhere near the low of yesterday. Bulls are just fine. That's literally what's going on in my head the first 15 minutes of the trading day as I'm just watching the relationship of these sectors. So it's a little bit of an indecision candle, but tons of space to pull back and form a daily higher low if we break the low of today, tomorrow. Healthcare still pulling back healthy. If the daily EMA 12 is support, then a daily bull flag is still possible. So again, the fact that SPY is not budging from the all-time high, while the second largest sector holding of the healthcare sector has pulled back for multiple days, shows us the money is going elsewhere. I know I'm a broken record at times, but this hammering this down and watching the swirling relationship of these sectors has been, in my opinion, one of the biggest factors to having such a good last 12 months of trading from last March lows to where we stand right now. Biotech sector. So again, ideal. We broke the low of yesterday to start daily consolidation and made a full recovery. And as I said yesterday, if we pull back and hold the EMA support, that is the best case scenario, keeping the bulls extremely strong. So on any pullback from here, I may re-enter what I sold for an hourly higher low. Do I look at this candle and say, why did I scale out of some more XBI yesterday? Not at all. FOMC today, absolutely taking some profit on that bounce and the fact that we haven't changed the daily trend yet. But that's what the bulls are going to be working on into next week. And I will look to add back because, again, being profitable in the position gives me a cushion to do so. So XBI is still looking good. If we get follow through from here, 149.24 will be a major level, and we will zoom out, and we will be scouting a weekly lower high, but this is the bulls creating space and shaping up a monthly higher low. SMH, pull back on the daily. So now we've got a tightening daily range, and if you want to simple it down, dumb it down, condense it to the 2-day time frame, and just make it nice and smooth. We've got a rejection from the all-time high, a pullback to our most important support of 241.45, a failure to break the recent highs, and now the bulls must hold this level. Because if this level were to break, we would confirm, well, I wouldn't call it a weekly downtrend. We would confirm the bears back in full control of the daily chart. It's up to the bulls to hold 241.45 and break 254.41 to confirm the trend change and be looking right back at that double top. So again, I'm just watching, okay, we've got XLV coming off the all-time highs. They're taking a breather. Semiconductors taking a breather. Is it now time for QQQ after a rejection for a couple days? Are we going to see the Qs hit a new all-time high? One day at a time. TAN. So TAN started the pullback, and it's much more significant than other names. And again, we can pull up our fib retracement. Did we pull back and hold the 50%? Yes. Just barely, but it's no longer a possible bull flag because of the size of that pullback. It would be possible to just see a higher low in continuation, but we would need increasing bull volume to stand out for that to happen, in my opinion. So the burden of proof is now on the bulls. Change the hourly trend back in their favor for a daily higher low to be established. And we're not seeing an hourly trend change shaping up at the moment. 2-day time frame, very clear equilibrium. Lower high is now set, and the bulls must hold the lows around 81 and then see that bull break. So essentially what today is telling us is that further tightening is in the cards. Let's look at EV names. NIO still has earnings to go, but NIO started daily consolidation, and it still looks just fine as well. Earnings are going to dictate, whether it's a significant pullback on the daily or whether we see a monthly higher low set. But considering Tesla has not found a bottom from its bearish earnings reaction yet, the fact that NIO looks the way it does on its daily chart is definitely still bullish in my opinion. MSOS bulls continuing their slow grind, and the volume is picking up now. So they stood out as the weakest new laggard sector. They were the laggards of the laggards. And over the past 2 days, most notably today, volume has increased. So today I did start nibbling some individual names. They have earnings mid-May, but I am liking the fact that we are seeing monthly consolidation into earnings because for the most part, we see bull runs into this sector earnings, and then we see really good earnings results, but we sell off because we ran up into them. I like the fact that we're consolidating into these earnings. Again, still 2 weeks away, but just as an example, a name TCNNF Bigger picture, looking for the monthly higher low. And again, these names are on the OTC, so you have to be tracking them and comfortable with the space. But I'm looking for a monthly higher low. And the daily chart just set a little higher low and is trying to confirm a little trend change to shift momentum for the first time since the all-time high. So that is why I am interested. But you look at a name like APHA on the Canadian side, again, big leg up today. The whole bounce, it doesn't look that impressive, but from the low, seeing the same laggard sector action as the biotech and solar sector, a very impressive 28% move and a strong close. The VIX still sideways, even on FOMC day, not breaking the range. We had a low of 1680. I guess we broke it by 0.1, but no follow through. Still, anything above 1540 is a daily higher low, and the fact that the broader market is still up at the highs and we are not dropping down towards those lows, I would expect a daily higher low to form here. Question is, when? All right, so look, that's what our sectors are looking like here. If XLF needs daily consolidation from all-time highs, does that mean XLV is setting a daily higher low and making its way back to the all-time highs? That would keep the broader market extremely strong. If we're going to see weakness, we have to see our bear checklist being checked off, because if it's not happening, I don't trust the bears. Dollar. So bouncing on the daily, and that changed since I last looked. So FOMC reaction here. Just another weak little bear flag and a drop to a lower low. Support from here is just 89.68 and then 89.20 the low. So bears continue their complete control in the short term. We did get the clues yesterday. Metals were weak before the FOMC reaction. But again, it was the miners yesterday gave us the big standout bear day. And then overnight, the metals dropped down and broke our recent supports. The FOMC is attempting to save the metal bulls here, keeping this daily consolidation looking just fine, and need to see a bull break of 1798 on gold for continuation. And silver, same thing. We're looking at continuation. FOMC saved from a key short-term support break. The miners' reaction, gap down for buying. Have we changed the hourly trend bullish? You could say so with the FOMC reaction, a little higher low and continuation. So from here on the miners, we're scouting a daily lower high compared to 36.84 because the distance that the bulls have to make up, 3.87, that's not a huge amount, but I would be watching, unless those metals convincingly see higher highs breaking daily resistance, we're going to look for a daily lower high on GDX. But overall, definitely a good day for the metals bulls considering the FOMC reaction. Oil, inventory report. So we did reject from 64.38. We broke it, but only by 15 cents. So 4 hour, still easily in an uptrend. Plenty of space for the higher low. If we lose the 4 hour uptrend, we look for a daily higher low compared to 60.61. And the weekly time frame continues to tighten up, but the most important factor is the bulls are maintaining a higher low every week the last few weeks and running, I should say, holding this EMA 12 support. Natural gas continues its bull move, still watching resistance of 2965. 4 hour uptrend is our guide. And again, when we lose the 4 hour uptrend here, plenty of space for a daily higher low to form as well. So for the most part, most bulls on this screen looking good. There are definitely individual names out there that are weaker, that have bear plays, but if we're talking broader market, there is no sign of the bears. And when we take it by a day-by-day basis, we know the most significant bear moves happen fast and hard. But for that to happen, our clues have to be glaringly showing themselves to us. And every single consolidation period that you see here that was notable, that was happening. Let's go into some trade review. So MNMD is the uplisted ticker that has provided a very great week. And it brings me back to the Canadian MJ trading days of just buying a strong close and then the gap up open, getting a nice quick sell, And that happened for the past couple of days, but now we're tightening up. And so now we're watching within a tightening trading range. And this is a bit misleading. The volume's wrong here. This was 60 million shares yesterday, and today was 42. So it was less volume on a daily inside bar, tightening up. But let's go over the setup. This morning, so what we have is the low of yesterday. I wanted a gap down open to buy the bounce, but obviously we didn't get that. We got a higher open. So all I do is wait for an hourly lower high to be set, and I'm watching for a play off of 375 support. We dropped down to 407. I wanted to break a $4 for it to be good risk to reward for me to make an entry into weakness playing off of 375. We didn't break $4, so I didn't make an entry into weakness. So what do? I still am expecting an hourly higher low. What is the first indication that an hourly higher low is being established? 5-minute trend change. What do we need for a 5-minute trend change to take place? A higher low and a higher high. So we hit our low at 407. We bounce all the way up to 428. That is a solid 5% bounce, but it is just a daily lower high, and there's EMA 12 resistance as a guide as well. We then pull back, inside bar, and I see those inside bars forming, and I say if we are going to change that 5-minute trend, 415 here needs to be our higher low. If we break 415 and that is not our 5-minute higher low, the odds of changing the 5-minute trend bullish is not likely. So I made an entry at 420. My stop is under 415 if that were to break. I'm risking 6 cents by the time my order would fill. And I'm looking for a hourly higher low. We got a bull break of 428 with no follow through. So that led for me to sell half of my position. I sold half at 425. My break even is now 415. So I pretty much have no risk on this trade. We held support of 415, and then we got the follow through. So filled 420, sell half 425, had a QQQ bottom fishing play here, and I stopped out. My stop was too tight. I was too distracted by MNMD. The play I was making on QQQ was a 2-minute falling wedge that broke bullish, but it ended up being a fake out. So I wasn't too upset about my tiny loss being stopped out. But I was just watching this 2-minute falling wedge, and it broke bull, rejected with a double top, and then rolled over to the low of the day. So that's what that QQQ mixed in here is. So that was a sidetrack. So I'm still in with a 415 average, and I sold the rest at 465. Why did I sell at 465? Because the hourly resistance, if we are going to remain in an hourly equilibrium, we're going to reject from 483. 483 is the high of pre-market. So at that point in time, the bulls were pretty darn extended. On the 5-minute time frame, we had just gone from 419 straight up to the 460s. The high of the day had just broken, but pre-market resistance was approaching. So I sold a little bit early into the strength, 465. We made it all the way up to 476 before pulling back. From there, I got my short-term scalping on because this is great volume and great volatility to do so. So, okay, I just exited my position, locked in a solid, it was more than a day maker, out at 465, and I'm just patiently watching. No FOMO, we got to consolidate. We're pretty darn extended. We pull back, here's your 2-minute EMA 12. I make an entry on that level, anticipating a 2-minute higher low after the notable bull volume and no sign of any notable bear volume. So I enter at 458. And every entry that I'm making here, you know, if we had kept dropping, it's a half of what I'm willing to make. So I enter half of the position I'm willing to have at 458. If we had kept dropping down in a waterfall fashion, back down towards previous support levels, I would have entered another position in maybe the mid 440s. But my goal is to not need to enter that second position, because again, that means I'm out of ammo on the trade, where I always want to have that ammo to ensure that I am in control. I was just looking for a 2-minute lower high to be this bounce, so I quickly sold at 4. In at 458, sell at 464. And you think 6 cents, big whoop, that's over 1% in a couple minutes. And yes, I am using smaller position sizes because it's such a volatile penny stock, but 1% in a few minutes, absolutely worthwhile. So I sold at 464. We topped out at 469. Again, I'm not nailing tops and bottoms, but I'm doing pretty well to get some of the meat in the middle. We confirmed a 2-minute downtrend. What do I do from there? I zoom out and I scout a 15-minute higher low, because at that point in time, straight bull run and absolutely looking for a 15-minute higher low. What's my guide? EMA 12. And I did a little bit of front running because the price didn't quite get there. I'm doing market orders on most of these orders, and we drop down towards it and I market buy. 448 is where I'm filled. So I'm in at 448 looking for a 15-minute higher low. Let's zoom in. There's your bounce off 448. It was a significant bounce. At this point in time, it's lunchtime. I need to get off the computer because I know I will be a bad trader for the second half of the day if I don't get outside and take a break. So from there, I was probably just looking for a 5-minute lower high, in at 448, out at 458. We bounced all the way to 468, and at this point, I'm no longer on the computer. So I sell at 458, and I'm gone. Briefly. Went outside, watered some things, came back inside maybe 15 minutes later. So, and I sold on this initial bounce. So there's a 10 cent gain, 2%. So now, I see a bounce. I say in the chat room, if we do not see notable increasing bull volume, a 5-minute tightening range is most likely. Got a little bit of an uptick in bull volume, but again, actually no, it was declining bull volume. So not expecting the break, 5-minute tightening range is most likely. We then pull back. I'm looking for a 5-minute higher low. So we're back in. 463. The low of consolidation was 456. I'm in at 463. And then from there, I held to the new high of the day. But when we rejected from the high pre-market and we started to see some weakness, I sold. And looks like I cut off that. I forget where it was. Another 1 or 2% trade. And had a couple more trades on it later in the day. But that's all we're going to go over for now. That's pretty much the meat of it. So just scalping the volatility and taking the most likely scenarios. How do I know we're going to form a 2-minute higher low or a 15-minute higher low? I don't. But I have the clues of significant bull strength, bull volume, just watching thousands of charts and watching how volatility generally plays out on these different time frames. Those are all things that have me confident making these day trades. That's all we got. One more check-in on SPY as we settle in here. So yeah, bulls are fine. We would need overnight weakness for anything to stand out. We'll be watching our major sectors as always. Have a good rest of your day. Do good things. This is the original mom and dad couple where the female was born here 2 years ago, I believe. I can just tell because she's the most comfortable duck with me out of anybody. The other female and the other partner had their 12 chicks from the other video. But I think they were just born here and then they moved them to a neighbor's pond because they left after day 1. So we're going to see what these two do with their brood. I don't know if brood is the right word. Their bunch of babies. Wildflowers still killing it. Not mown until they're done. These maple trees had some really cool bright pink seeds hanging down, but I missed them when they were in their prime. In Maine, they have a prized kind of fern called fiddleheads, and you harvest those and you can pickle them, a local delicacy. I assume they're in other areas too, but I had never heard of them. This fig tree is about to explode this year. It's on its second full spring and summer. And you can tell the first year that you plant perennials, they establish their roots, and that's really what they're focusing on. The second year is when they explode in the upper growth with new growth and leaves and flowers. Excited to watch what this one does this year. This is a big service berry. I think it's a tree. It's one of the first berries that come.